Hi, I'm Darius here to present the top three things from Keith's macro notebook today. Number one, Europe. You're seeing a lot of fall through this morning on the immediate term trade breakdowns we've been issuing the last few weeks in the Euro Stoxx 50 and the DAX. Both are below our immediate term trade lines and our intermediate term trend lines. You're seeing liquid markets like Portugal down 3% this morning to down 4% for the year to date. Obviously, some news there's some news flow there with Bank Popular Español. I can't even pronounce the name, but we'll definitely get that. We'll get some deep dives on that over to you in the next coming days. Number two, India. India is not Europe. The finance minister there delivered the bacon on the budget last night. They had the market up 1.3%. So what they're calling for in India is sort of a deficit reduction, very gradual deficit reduction through 2016, narrowing the budget deficit by 150 basis points over the next 3 years. And what they're really trying to do is set India up on a very sustainable economic growth path, very similar to what the UK did with austerity about 3 or 4 years ago. And it's definitely something we like, and we'll continue to sort of support on the long side of Indian equities, one of our favorite markets in the world, and has been for quite some time. And lastly, gold. You got down dollar, down rates, up gold. So exactly, a lot of investors did exactly what they should not have done on Thursday's jobs report, which is basically chase back and all the stuff that hasn't been working or hasn't performed as well as these things have in the year to date. Again, we continue to like gold on the long side. We think, obviously down dollar, down rates, it's been the same way since really the beginning of time. And as long as we continue to have those forecasts, we're going to continue to like gold. And so with that, those are Keith's top three things from his macro notebook.